Welcome to the Friday's edition of MyStockScanner Live. The week is nearly done, but the insights are just getting started. Let's see which stocks are ending strong and which ones need a timeout. And talking about timeout, US was closed yesterday for Thanksgiving, and today is only half a day as the Wall Street closes for business at 1 p.m. local time. That'll be 7 o'clock tonight, Central European time. Of course, if we are looking at Liam, then it'll be 6 o'clock his time. They're 5 hours ahead.
The proper time.
Yeah. Proper time. Yeah, you can call it whatever you want. But these two gents here, I can see Liam insist on taking my name today. That's fine, but it is still Liam Flavel, and he's back on the show. Hans-Henrik, of course, joins him. Liam, you first. Half a day in the US. Does that make a difference to the market that it's just half a day, a sprint over there in the US?
It does. It means it's generally quite a muted day today, and you're not going to see an awful lot of news coming out. We can really see it this morning when I do my roundup in the morning of what's gone on. There's not a lot of investing stuff in there, so yeah, just a quiet day.
It's a little quiet, and everybody had their stuffing yesterday, so they're all stuffed today. Hans-Henrik, it's also close of the month. We're close to month's end. On Monday, it's going to be December 1st. And I think that I have heard from pundits, from newsmakers, from banks, whatever, oh, it's time for the Christmas December rally. Is that how it is? Is that seasonality?
Well, it used to be. It used to be the January rally. Then everyone wanted to come in front of that, so they were in on the January rally. So it became a December rally. And I don't know, it wasn't a November rally this year for sure. There's also something called windows dressing, where there's a lot of trading back and forth just before New Year. So there might be some. I wouldn't put too much into it.
We will sort of sum up November when Monday come, and then of course on the show today we'll also look forward to December and see what it brings us. But on the show today we are asking, are defense stocks back in favor? Will there be another surge? Also, the early numbers from US Thanksgiving sales, well, they're already in, and Black Friday online shopping are up according to Salesforce. Apple are beating Samsung in sales for the first time in 14 years. It's Friday, and therefore we, of course, have the Friday face-off. It'll be one that for sure can be heard as we pit GN Stornor against Dement, who shines the brightest and who sounds the loudest. And finally, we look forward to next week's earnings, and we'll also talk about a speech on Monday from the Fed chair. Jeremy Powell is going to be speaking there.
What? Sorry.
Oh. Do you think it sounds like a boring program while you're referring to Jeremy Powell?
Jerome Powell is, okay. I know Hans likes that sort of thing. That's as exciting as it gets in Viborg.
Yeah, okay, yeah. But well,
tells a lot about my life, I guess.
What I'm going to do is I'm going to give today's number, and that's going to make you sigh as well or yawn, because it's just the number 3, and we'll see what it's in regards to.
I know what that is.
You know what that is? Is that you because you're number 3 on the show?
Happy birthday to yeah. Anyway, carry on.
We shall see. But first, Germany this morning set to approve 2.9 billion euros in arms in a defense surge. We are guessing that some of that money is going to go elsewhere also, apart from Rheinmetall and Hensoldt and what have you. We're guessing a little bit Dassault Aviation, but that's also because we're going to bring it up in the 3-point playbook. But excuse me, is it just me, or haven't we heard all about those billions before? Is that just old news being brought up again?
Yes, yes and no. When EU they agreed on putting a couple of 1,000 billion euros into defense, and now it seems like France and Germany and Spain, and they don't really have the money anyway. But Germany set to approve 2.9 billion euro. That is nothing. That is a thousandth of what they have planned to put in. So we were a bit interested in seeing if that had any effect on the defense stock today, and it hasn't. Rheinmetall, Saab, Kongsberg, Babcock, Hensoldt. I've been through a bunch of them. There's nothing really there, and this is It's some guns. It's a bit of artillery. It's nothing big, to be honest. Some drones, but nothing that moves anything. They need to, dare I say, bring out the big guns before it really moves something.
But if we look at those stocks, I have followed them over the last month and a half, and it seems like they've been lagging, sagging, diving, and lately kind of inching up again. If we look at now, we talked about the result in aviation or aviation in the 3-point playbook. Isn't there anything to be had?
Oh yeah. First of all, let me see. We did Dassault Aviation here, or whatever it's called, a couple of weeks ago. This is a daily thing we do for our members, the stock of the day, and where people can get a very quick overview. What is this stock? And but let me take you quickly through it here. It is a company that makes both military planes, private jets. There are some space programs, satellite things in there as well. So they're quite versatile, and in these days, it would be something that you would think would have a good chance. When we do our 3-point analysis here, 3-point playbook on it, we start looking about if this is a quality company, and it is. It has a quality score of about 78 out of 100, so that is absolutely decent. We want that to be somewhere above 60. Earnings per share, that is going up, and that is always a good sign. Revenue have been a bit bumpy, but has also started to tick up in the estimates here. The PEG ratio is where we look at the PE, the price earning, and then divided by expected growth next year. We do like that to be below 2.5, because that shows we're not paying too much for future growth, and this is absolutely fine. Free cash flow is a bit all over the place. That is not our favorite, but we cannot get it all. Return on capital employed is somewhere around 8, 10, 12. Also okay for sort of an industrial company. They can easily pay their interest rates. If we look at the potential, and that was what you asked about, isn't there something to be had here? When we do that, we look in our value graph. And in here, the frequent viewer know that we work with a bear case, a base case, and a bull case. And that is simply where we take the estimated earnings that analysts think they will earn in the future, and then we multiply that by different PE scenarios that our system here brings out. Our system has brought out some values here, but I have adjusted them because I do like them to be closer to historic values. When have investors been thinking they were expensive or cheap during history? And when we do that, we can see there is some potential in here between -1% in the bear case and up to 50% in the bull case. So that is actually fine. We're going into a new year here, which means we will be roughly around the midline, and that is okay.
If I can quickly ask you, because of course we just talked about that Europe, EU are going to spend heavily on military. They might not be able to afford it, but doesn't that therefore that the line should be drawn up instead of you drew them down now?
But it already is, to be honest. We have them in a fair place here, and we can see the price went skyrocketing when these deals went in place. So what you can say is much of this have been priced in, and I think investors have started to realize that many of these defense stocks are industrial companies. They cannot. It's not like a Meta that can take in 1 million extra customer just by pushing a few buttons. They actually have to produce goods and get steel in and aluminium in and get gunpowder in and get it's actual industrial work just on the defense scale. So they cannot just 10x the productivity. So I actually think that a PE between 15 and 24 for an industrial company like this is fair.
And that's the difference here, where actually the PE is the bit that's changed. The earnings have gone up slightly as well because people expect it to earn more, but the PE ratio that investors are prepared to pay to take more risk to get that more reward is already baked in, and you can see that in that upward graph there.
Yeah,
and It's interesting in that sense. We need the last part as well, of course, with
Yes.
the timing and stuff like that, because it has been moving sideways and a little bit down. And again, I'm gonna go back and say, is this a buy the dip situation? Because it's dipped a little bit.
Yeah, first of all, we were not in Dassault Aviation here in the beginning, in the spring. We were in a lot of other defense stocks, but this is a good picture of many of these stocks. They went straight up. We kept it for a while, but we went out of most of our defense stocks here in July, August, because they were expensive. They started to be pushed a bit down. Right now, it is under the black line here, which is a 200-day moving average. It's also below the 50 and the 20-day moving average. It is double red in the MGI indicator. So right now, we would not buy it. We often have stock of the day where we put it on our observation list and we buy it maybe 3 or 6 months later, or we never buy it. So just because it fulfills criteria number 1 and 2 doesn't mean we buy it.
No.
We are still waiting for the timing. So right now, this will not be a buy. I would like to see some sort of movement up, finding some support, and then showing that the big buyers are coming in.
We shall see. We definitely follow it. And since it's Thanksgiving in the US and Black Friday, we also have a Black Friday offer for you. You probably received it in the email. We'll talk more about it later in the show. But I also want to as we move to Liam, say that we give thanks for our members in that sense, that they, of course, are our bread and butter in this situation. They are the ones that are paying for getting all the news and stuff like that. But this show, as a matter of fact, is free, which means that you can share it with your friends via YouTube or any other platform. Send them a link so they can watch the show, because it's absolutely free and everybody can watch. You don't even have to be a member. So in that sense, they can get a little bit of news and get to see what we are talking about. And talking about the Thanksgiving in the US, I said in the beginning, Liam, 6% up, says Salesforce. Data shows that Thanksgiving spending is already there. And maybe people are out buying an iPhone. It definitely looks like that when you look at the numbers, because Apple iPhone are, for the first time in 14 years, according to reports, beating Samsung. That sounds like almost a mistake, not for Apple, but like that stat sounds weird almost.
It is, and I was quite surprised. I think we brought it up on a show a couple of weeks ago that they'd just come out. They'd sold 25% of all iPhones in China in October, I believe it was. So I think what's happening with Apple at the moment is they made a big thing about the AI release last September when they brought out the last iPhone iteration, and everyone looked at it and thought, well, that's a bit crap, isn't it? It's exactly the same as the old one. The battery life is actually worse in most occasions. So everyone thought, I'll hold on to mine. I don't need to. I don't need to spend another $1,000-$2,000 on a phone. Now they've got to year 2. I think they're getting the benefits of that, where people are thinking, I haven't had a new phone for a couple of years, so I'm going to upgrade. So I think that's probably partly where they're coming from. Apple as a company itself has just hit, I think it's its all-time high, isn't it? Yesterday, we can see here, just doing a very quick. Hans did the. Oh, sorry, I should just say, sorry. You know, we're pronouncing it in its native language as well, isn't it? Like Dassault and things like this. In English, is called Apple. So that's important to state, so we don't sort of annoy people. You can see here that the qualities. Apple. We don't need to explain it. It's a quality company. It's got a quality score of 98. It's one of the best companies in the world. The earnings are going up. The PEG ratio is quite high for us. It's not below the 2.5, 2 that we like, but everything else is in the green. And the free cash flow it's generating, all of these things are absolutely perfect. When we come down to the value chart, that's where we start having a problem, because the second question that we ask is, if we're going to buy this stock, we only want to buy it if it's cheap, if it's undervalued and there's lots of value to come, or the market's looking at it thinking actually it's quite undervalued right now. And we can see here on my chart, I've sort of aligned the bottoms over the last few years with the bear line, so that's where we think it will drop to in the worst case scenario. And I've aligned the peaks up here. We could actually go up to this point if we wanted to, but let's keep it around here for now. And that says this is where, in a perfect world, we think it will go. This is where the analysts think it will go. Maybe our base case, we can raise it up a bit here. So there might be a -8% potential, if in the worst case, or an 11% return in our what we expect to happen. So to us, it's quite expensive, and we probably wouldn't look at it too much. From a technical point of view, from a 0.3, a question, of our playbook, it's still in the buy zone. It's still in an uptrend. Annoyingly, we were talking earlier on about Apple. That's where I drew my line. We probably would have gone in on the playbook here. And to be honest, I have to hold my hand up and say that was completely Hans-Henrik's fault.
Okay. Well,
Yeah.
I'm glad we sort of sorted that out. And I think that we should jump to the next, because we don't want to move blame around here.
No,
Let's move to the next thing on the agenda today, and that is, of course, because it's Friday. Let's have it, the Friday face-off, and I hope you guys are listening. It's all about listening. It's we keep it Danish this Friday. GN Store Nord against Demand, or I could say it in Danish because apparently that's what Liam wants. Versus Demand. Who's who here?
All right,
Demented.
I'll start out with GN, and that is it's you can see here it's mostly grey. That means it's not terribly bad, but it's also not fantastic. Has a quality of 63. That is okay. Earnings per share have been a bit all over the place, and that is not too good. And revenue have basically stalled, so that is not good. We can see analysts have dropped their estimates for earnings per share. The ROCE is return on capital employed. What yield are they actually making on the capital they have available? That is not too good. Free cash flow, decent. So overall quality, I'm not excited. Going into the value chart, we can see here, let me just bump it up so we have a few more years. Apparently it looks good, between around 4% in the bear case and 61 in the bull. However, it has been again all over the place on PE numbers. It has been up to, what is it down here, 100 and 104 at some point at a company that basically didn't make money. So it looks good, and analysts are betting on 38%. I'm not completely convinced because we do like some stability in the price earning levels, and I can't see any. So GN, not a big fan, to be honest.
Okay, Liam, I better serve it up to you then, and say you're up with Demand here.
Or Dement, as I believe it's called. That's my Danish coming out. Demand is actually a better company. My daughter actually worked for them a couple of years ago, which I'm not sure she would agree actually, but that's a different story. You've got a quality score of 88, so it's at the top of the pile in Europe on quality score. So it's a good company. Earnings stagnant for a couple of years and then starting to go up according to the analysts, which is a good thing. PEG ratio is a little bit high, so those numbers tell me it's a quality company. The earnings are fairly good, but the PEG ratio tells me that probably we're going to be a bit disappointed by when we get to the value chart. But that's a guess. Revenues are going up. Everything else is in the green. The company can handle its debt particularly well. That's the interest coverage bit here, which is always important when sort of things hit the fan. And the price to free cash flow and the cash flow generation is absolutely fantastic. So it's producing bundle loads of cash out there. If we just move to the valuation to work out whether it's cheap or expensive at the moment, we can see, if I just move some of these around here, the green line, the bull line I put up the top of here, you could potentially say it could go up there. It's been there in 2025. The red line sort of matches all the bottom, the bottoms, and then and that's close to the analysts. The blue line, I'll just put in the middle between the two. So actually, when we look at it, the analysts think pretty much the same case as GN, but we've got far more solid history back there to go on. So demand is something that we can probably count on a little bit more to return some of these numbers. And the top line numbers, the 49% this year, look great. The problem is that back here, I put a stock of the day on Demont. And I said, it looks really good. If it can turn around and start going up, brilliant. And it's carried straight down since then. So this stock and GN Store Nord can obviously carry on going down for far longer than we really expect. And from a pure 0.3 point of view, is now the right time to buy? Hell no. We're below the 200-day moving average, which is the average of the last 200-day closing prices. Here, this black line. We're below the 50-day moving average, and we're even sort of just touching the 20-day. So, and both the MTI figures we've got here, the indicator that shows us whether we're in a good uptrend or not, are both red, which means, yeah, absolutely no, we wouldn't go into it right now.
I'm gonna ask you guys, and of course, this is like looking into a crystal ball and trying to predict the future, because these two companies have always been rumored that somebody's coming to pick them up at one time, and of course, that would change the outlook on these stocks, wouldn't it?
Completely.
Oh yeah, definitely. However, there's nothing on the rumor side right now. There's not a major thing under the normal news picture right now. Not that I have picked up anyway, but that could come out of the blue, of course.
Yeah. So far, the head-to-head here, because that's what it was. It's the Friday face-off, and we're closing in on the end of the show. We have a lot of things that we need to talk about. We need to look into next week. I also need to reveal the number of the day. I said it was number 3, and that is, a matter of fact, the place that Denmark takes on a very interesting chart in that sense. It's the Global Talent Competitiveness Index. And I know Liam is frowning upon it because, of course, UK is not on. But
it's not on there. However, well, go on, carry on.
Okay, we're number 3, and number 1 is Singapore, 2 is Switzerland, and then I can tell United States is number 9. The thing is that it's a thing that has been done 11 years in a row, and it's from a DC-based think tank, and they've been doing this. So put Denmark at number 3, and that's hence the number of the week, the number of the day. And Liam, what do you want to? Let's come on, bring it.
Oh no! I was going to say, the guy that runs it is called Jesper, because everyone's called Jesper in Denmark. Also 3 is another number of the day, or number on Sunday, because it's OpenAI's third year birthday, or ChatGPT's third birthday.
Oh, there we go.
Ooh,
so we put a candle in the cake.
Well, whether it's got another year on it, I've got no idea.
Oh, let's see. But as said, we're going to look into next week, because on Monday, when we look at what happens on the economic numbers side of things, this guy is going to take the stand. He's going to speak. What he's going to say, we have no idea. I'm going to ask you guys in a second. But we also maybe get some numbers from the US. At least we are pretty sure we don't get non-farm payrolls. We might get initial job claims and maybe some core PCE. Guys, anything that's going to rock the boat, anything that's going to change anything, maybe put on that December rally?
I know exactly what Powell will say. It'll be in the likes of blah, 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 data-driven, blah, 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 divergent opinions, blah, blah, blah. He will basically just be saying, we have no idea where this is going. We still need data. There is a slowdown in the job market, maybe some inflation, same as you've said 100 times.
We're getting to the point, though. He's going to be out soon. It's going to be blah, 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 screw you, Trump, isn't it? It's got to be. It's got to go out on that.
Well, the interesting thing here, if I may just add, the rumor is that it is going to be Kevin Hassett that will be the new Fed chief, and that is Trump's mouthpiece. So the second he gets in there, interest rates will just be cut down, and that will be major inflationary.
Mouthpiece? Are you sure?
Oh, maybe on the
speakerphone. Maybe. Oh well. Anyway,
it's a wrong choice of word in this. Okay, yeah.
I can feel the Friday feel is in the show right now. But before we let it all go,
that's because Liam is sober.
Yeah. But we're talking about that, Liam. You're up here because we also have earnings next week, and there's some also pretty interesting things. I mentioned Salesforce in regards to Thanksgiving numbers in the US. They're going to bring out their numbers on Wednesday. So as a matter of fact, we have a few interesting numbers next week. CrowdStrike as well, Credo. There's going to be some numbers that are going to tell us a little bit, but again, touch up on AI. Your expectations, Liam, for next week?
Next week, it looks like the numbers are going to be up, which is surprising. It'll be interesting to see what the makeup of those numbers is. Who's actually buying and pushing, the sales up by 6% or so this year. We suspect it's going to be the richer side of things in America rather than the poorer side, because they're really struggling, and it's not a good overall look for the consumer over in America.
We shall see. Marvel, by the way, also out with numbers. Pure Storage also, and talking about the. But talking about consumers, Kruger, the big chain in America on the supermarket side, is also going to bring out numbers. And talking numbers, if you haven't received your email yet, check up our website, check out our social media in regards for our offer for Black Friday. It's now the time to sign up and get your friends to sign up as well and watch the show here, because it is free to watch the show, and you will get tips and you will get an insight to what our members are paying for and why our 3-point playbook portfolio is up by, I'm going to look up, 33.5% so far this year. So yeah, check it in, check it out. We will open up that portfolio on Monday. And I know now we're getting so close to year's end. Hans-Henrik, Liam, can we maintain the speed on that number, 33.5?
Absolutely.
Okay, he promised.
I have no idea.
Liam, he promised.
I'm not sure that's a promise, especially not with the financial issue over there. But no, it could be. I mean, I think our market indicators are saying we're a bit toppy at the moment, so we might see a bit of weakness in the next few weeks. But we're only 57% invested, so it's not going to hurt us that much. And we're at market highs now. We're at the highest point almost that we've been to so far. So. Good. It's not been a bad year at 30%.
No, it hasn't. And again, we will keep you informed every Monday, Wednesday, and Friday when we broadcast at noon. But also be sure to check out our platform and, of course, also our social media. Thanks for spending your Friday with MyStockScanner Live. And remember, the markets rest, but smart investors stay ready. And that's why you should check out our platforms and social medias for all our articles and in-depths. Check out them also for Face Off, Stock of the Day, and Hans-Henrik and Liam's answers to questions that you can send us at FOMO@MyStockScanner.com. Have a great weekend, guys. Have a good Black Friday and happy investing.